Hi, everybody. This is Eric Summers with PC Homes and Real Estate, Team Summers. We're going to do a video today about getting loans to buy commercial or residential property. There's a lot of talk out there right now about interest rates going up and people worried about that. And lenders are being very creative and finding ways of bringing those rates down for their clients. So I'm going to talk to you a little bit today about some of those programs. And I want to qualify all of this. I am not a lender, I'm a real estate agent. If you want any more information based off of this, what I talk about today, please contact your lender. If you don't know one, go ahead and let us know, and we'd be happy to send you because we know a bunch of lenders, and they could get more detail with you and give you the ins and outs of it. But just to give you some ideas on what's going on. There are a few different tricks that lenders are using right now. One is a mortgage assumption. And a mortgage assumption, and I'll read it to you here, is an assumption mortgage is a loan that can be transferred from one party to another party with the initial loan terms remaining in place. So basically, you are just go in and you want to buy this real estate property. You take over their payments at that interest rate, at those terms. So if you're worried about interest rates, there are places out there that you can go and find a mortgage assumption and just take over the loan payments, and you could still get that great interest rate that they got when they bought the real estate. Real estate. The other is a contract assignment. A contract assignment allows a buyer or investor to assign their interest in real estate purchase and sale agreement to a third party, normally for a fee. So you can take that and you can assign it to somebody else. You have to pay a little bit of a fee, but then you can also get some of those great rates going for you. Another one on here is called a wrap transaction. A wrap transaction is a type of seller financing wherein the seller's existing loan is wrapped by a secondary loan from the buyer to the seller. The payment from the buyer is then used to pay the seller's existing loan. So again, we're wrapping this loan around. You pay a third party, they handle all the transaction, and then they also pay the seller's existing loan, and you can still get a really good rate. And again, I know that can be a little bit confusing, but yes, if you want any more information, contact your lender or let us know, and we can set you up with somebody, because we know, again, we know a lot of lenders. And again, last, there's always seller financing. Personally, I don't really like that one as much, because historically seller financing comes with an even higher interest rate, but not always. But that is another way of getting around some of this, is that you could just pay the seller, and they carry the note. So there are ins and outs to all of these. FHA loans cannot be wrapped. So if the real estate property you have is on an FHA loan, you can't wrap that one. So we would have to get even more creative and figure that one out. VA loans can only be wrapped with a real estate contract, which means we have to do up the real estate forms, get a contract done, and then the VA would actually accept a wrapped loan. Most wrapped loans are done on a real estate contract, so seller remains in the title. So the seller remains on the title even though you're making the payments until you pay that off. And a lot of times you can go get started with the wrap loan. And then if interest rates come down over time, you can turn around, refinance, pay off that seller. And then that's when you can get the, the property in your name. Taxes and insurance collected in buyer's monthly payment to seller. So just like you're paying the bank, you'll also pay for insurance and taxes in an escrow type fund, and then they would disperse it. Second, insurance policy. If you get the insurance policy, my understanding of it is that it benefits the seller. So if something happens that, they still own the home, they would get the benefits from the insurance claim. No mortgage insurance for down payments less than 20%, which is really good. Uh, and yeah, so that basically sums up the list. So if you want some more information about creative financing and figuring out how to make the best of the market right now, because there's not so much of a fight for real estate anymore. If you're a buyer and you want to go check out some properties and hopefully buy one, there's some creative financing here, and hopefully we can find you a place and go buy a home or a commercial property to invest in. So please like, share, subscribe to our YouTube channel. We'll be sending out some more videos over time, and hopefully this will help you out. If not, have a great day, and we'll talk to you next time. All right? Thanks.